banking crisis the U.S. is experiencing right now has pushed us closer to a recession. That is the headline from JP Morgan Chase CEO Jamie Dimon, who told us that and a lot more in his first extensive interview since the collapse of Silicon Valley Bank and Signature Bank last month. We went down to Atlanta to sit down with him, where he was taking part in a community center branch opening in the historic district of Summerhill.
One mortgage, one business, one account that gets someone to save or helps someone get a job, so one skills. And we do a lot of work with communities around community colleges and skills and affordable housing, and you can lift up society.
This is the community center branch here, but you have a lot of them. You opened the first one in Harlem in New York City in 2019. You've got 16 cities now, Atlanta. Why do you do this?
Yeah, this is a great idea someone had, it wasn't mine, called a community branch. So it's bigger, there's a community space. It's built by local contractors, think of minority contractors, local food, local art, the artists, people put the art up. When we hire locally, we have what we call a community manager. So you have a branch manager, traditional, but the community manager gets to know all the local businesses, not-for-profits, religious institutions. We invite people in to learn about mortgages and saving money and starting a business. And it's been unbelievable. And I've been to like 14 of the 16 or so. We've also taken the community manager. We now have 120. That's worked so well. We're putting them in a lot of different communities. So it's just part of what we try to do when we enter a town. We have 30% of our branches or so in lower income neighborhoods. And we just try to lift over neighborhoods and bring in all the things that JP Morgan Chase can do to help.
One of the things you say, though, because this is part of the $30 billion commitment to Black and brown communities across country, but you explicitly say this isn't charity.
Yeah.
There's a strong business case.
Yeah, that's totally true. And there's two things. So those are huge numbers that we say, 12 billion of affordable housing, 8 billion of mortgages. But at the end of the day, it takes place at a local place. The mortgage loan officer, reaching out to people, helping them through the progress, getting them a homeowner's grant if they need something like that. So that's how it takes place. But when you do it, we're right across from Georgia State University. There are businesses opening up around here, partially because you have a branch in here. And it lifts up the community, but it's also good business. And you want good business. As these businesses come here, they're hiring locally, there are paychecks in the neighborhood, and it lifts up everybody. So that's part of a job of a bank.
What's interesting, though, about this time, exactly this moment that we're sitting down, is we're in a rising interest rate environment, and it's just harder for folks to get mortgages. You've lamented that reality, especially for lower-income individuals, in this country right now. Do you think, given the high prices of homes now, the rising interest rate environment, this American dream of owning a home is really no longer for a lot of folks?
I think we have to bring it back. If you look at homes, for most people, they're the way they start building family net worth and family wealth. And there are a lot of things to do. So you already see home prices are down in some places. Builders are already making concessions. We do a lot of special things, special purpose credit for sometimes in low-income neighborhoods. I think the government can do a lot of things. We talk about these things here, but the government can do a lot of things to reduce the cost of mortgage.
Better than they're doing now.
Absolutely.
What?
Reducing production costs, servicing costs, origination costs, securitization costs, which would make the cost of a small mortgage probably 50 to 75 basis points cheaper. That alone—
That's a lot of money a month.
That's a lot of money a month, and to make it available to more people. So we try to take policies, things we do here, but also worry about what Washington can do to make it easier to accomplish these goals.
Are they listening to you?
I've been begging in this one for a long time. I'm praying, I'm begging, I hope they'll listen to this. It's so important, and the other important thing is we're not doing it for JP Morgan. It won't affect the future of JP Morgan if we make mortgages more available to lower income folks around America. It's so important for lower income America. And so, we won't stop pushing this one until we get it done. I think we should double the earned income tax credit. And then there is
Warren Buffett has been saying that for years.
So for the American public, if a single parent is with 2 kids is making $14,000 a year, the government gives you $6,000, roughly. If you don't have children, they give you about $600. My view is we need to get more income into the neighborhood. So if you kind of add to that earned income tax credit, I would get rid of the child requirement. You get more money into the neighborhoods, and that money will be well spent. It will lift up those communities. There'd be nothing like that. And the other thing you got to remember is jobs bring dignity. Jobs bring better social outcomes. Jobs, that first job, because sometimes people make fun of the burger flipper job. Very often that burger flipper ends up owning the restaurant.
I've done it.
Exactly. We've all done it. And that first job, that first rung on the ladder.
Have you done it?
No, but I served in a restaurant.
Yes, I
didn't-
learned
I
so
didn't flip
much
the
being a
burgers.
waitress. Yeah.
So just getting people to open an account. We've got accounts where you can open here, start saving money,
Yes.
thinking about it. A lot of us had the benefit that our mom or dad took us to a branch, and we started the first
I remember
passbook.
that.
And then you see your money go from like $84.75 to $85.17. It's like that was magic. There's a God, like interest. And so people learn, and we want that to take place here. We don't want people to be afraid to walk into a branch here. Come as you are, bring your kids, learn what you're doing. That's why the community manager is so important, because a lot of people, look at a bank and they're going to walk by. It's not what they're comfortable with, and we want this community to be very comfortable walking in here.
I just read your annual letter that just came out this week, and let's dive into the banking crisis because you write a lot about it. Is the current banking crisis over?
This is not 2008. Okay, this is much more limited. There are only a handful of banks that had this particular problem. They'll eventually be resolved one way or another, and I think then people should take a deep breath. In a week or two, a lot of these banks can be reporting earnings. I think they'll probably be pretty good. The Federal Reserve made some bold, dramatic moves to help it easier for some of the issues they had, and I'm hoping it will resolve rather shortly.
You're hoping.
But hoping, yeah.
But is the crisis over? You wrote in your letter there will be repercussions for years to come.
Well, that's different. I think those repercussions are regulatory. I acknowledge, obviously when you have a problem, things need to change. But I'm begging the regulators, let's just take a deep breath. There are hundreds of rules. You have to be very careful. What do you want in the banking system? What do you want out? How do you make it easier for community banks and regional banks? How do you reduce their costs, not increase their costs, but also make it safe?
Do you expect more banks to fail this year?
I don't know, but if there are, honestly, they'll be resolved, and it'll probably be the last of them. I think we're getting near the end of this particular crisis, and fewer financial institutions. Remember in 2008, it was hundreds of institutions around the world. Far too much leverage, we don't have that. Huge problems in mortgage markets, we don't have that. This is nothing like that, and the American public shouldn't think that. This will resolve, and then we should go look at what went wrong and fix it in the light of day.
Well, so then what was it? If this is coming to an end, is this a situation like Warren Buffett famously said, only when the tide goes out do you learn who's been swimming naked? Were these banks swimming naked?
Yeah, so I said there's hiding in plain sight. Everyone knew about uninsured deposits. Everyone knew about interest rate exposure. Everyone knew about held to maturity portfolios. The only real difference was we called concentrated clients. So Silicon Valley Bank had a handful of people who controlled 35,000 corporate accounts, and they just left. $140 billion or something over a course of 2 days. That's not happening to other regional banks.
Well,
they don't have that issue, nor do they have all these other issues. So it's only a handful that are much offsides.
But then what's going on with First Republic? I mean, you led the effort to swoop in $30 billion from you and your fellow banks to try to steady First Republic, and you've acknowledged we don't even know yet if that worked.
Yeah, so that was an attempt to try to help give them time to resolve a situation. We represent them, so I really can't talk about any more than that, and we hope it resolves one way or another. So that'll come in the future. But I don't think this is that kind of crisis that you're going to have it ongoing forever. It will be. Now, Warren Buffett said when the tide goes out, you mentioned something else, rising rates is that tide going out. And if that tide goes out a lot, so I would tell people, be prepared for higher rates. I don't know that's going to happen, but be prepared so you're not in that tide.
You think the Fed raises again in May?
Well, there are two rates. One is the short rate. I do not know what they're going to do, and obviously they may not because of financial conditions, but there's also longer rates. And that has a different effect, and that the Fed does not control directly. That's controlled by global investors, sentiment, supply and demand, and that's gotten bad for sovereign debt. Okay, so to me, yes, you have a chance that long rates will be going up, and people might get used to higher for longer.
Higher for longer.
Yeah.
Get ready for that.
I believe that is I think it has a higher outcome than other people. I'm not predicting it.
Right. Is the American banking system truly safe and secure?
Yes. I mean, the banks have extraordinary liquidity, extraordinary capital. When they report earnings next quarter, the earnings are going to be quite good in my opinion. They can handle not just one stress test, but multiple ways of being stressed.
That's the big guys who have to abide by all those requirements. I'm talking about the mid-size and little guys that don't anymore.
Yeah. Well, they have far more requirements than you think. So I don't think it was the requirement. Some people think that they were loosened on. That rollback literally had nothing to do with it.
How do you know?
because they had the same internal liquidity requirements, stress requirements, reporting requirements, supervisory requirements, they made mistakes.
It was different if they were under $250 billion in assets.
Not as much as you think.
So all those senators that are saying it was wrong to roll them back, Democrats rolled it back too, some of them. Those senators are wrong?
Yeah. You know, look, it's not, again, when you talk about regulations, they're looking at one thing, and I'm looking at multiple others. So they had high liquidity requirements, high capital requirements, they met the requirements, they had too much interest rate exposure, and things should change, but they were not out of line with with regulations.
Well,
and it wasn't the regulatory change, it was other things. And in life, that's going to happen. This notion that somehow you can make everything perfect is wrong.
I know, but
We
you
know
don't
that
want big, well-known banks to collapse.
No, you don't. What you also really want is that every now and then something will happen and the system can handle it in due course.
Let them
And
collapse.
that's what yes. If failure is okay, you just don't want this domino effect. And so when you have a bank run, you end up with some kind of a domino effect. So I guess my point is we are close to it, get to the point where a bank can fail and it doesn't have this kind of effect.
Okay.
And I think just monitoring, changing a few things can get much, much closer to that.